Hey everyone, welcome back to Corporate Decoder, the place where we decode those complicated corporate filings. And boy, this one from Artsway Manufacturing is a mixed bag. Let's just say their year was a bit like Iowa weather, unpredictable. We will see in a minute. First, the headline: Artsway, a small company making farm equipment and modular buildings, just filed their annual report. The report shows that while one part of their business is struggling, the other is doing pretty well, leading to a complicated year overall. Buckle up because we're about to dive into the numbers and see what it all means. Artsway has two main businesses. First, there's the farm equipment side, making things like grinder mixers and manure spreaders. Think of it as the company's roots, the equipment business that started it all. Second, there's the modular building business, which focuses on building specialized structures like research labs and animal housing. It is their newer, more modern side. Before we get too deep, it's important to remember that this report contains forward-looking statements. Basically, Artsway is making predictions about the future and things could change. Many things such as interest rates and commodity prices are outside their control, so what they expect might not actually happen. Keep that in mind. Now the good stuff. Artsway's main plant and headquarters are in Armstrong, Iowa. That's where they make most of their farm equipment. They also have a facility in Monona, Iowa, where they build those modular buildings. They own all their properties, but they have mortgages on them with Bank Midwest. Let's talk about how Artsway is doing. The company had a tough year. Overall revenue went down about 19%, landing at just below $25 million. That said, the company finished the year with a net income profit, and their working capital, which basically are their liquid assets, increased. Their loan situation with Bank Midwest looks okay for now. Their financial report mentions a potential future income source, something called an employee retention credit, or ERC. It is money the government might owe them from when they retained their employees. They're hoping for about $1.2 million, but the IRS has put a freeze on processing these types of applications because there are many uncertainties about the timing of the claim approval and payment. The company is delaying recording any of this until they actually get the cash. This is important to remember. If that money comes through, it could significantly boost their finances. Breaking it down by segment, the farm equipment side had a really tough year. Sales dropped almost 35%. Why? High borrowing rates and low commodity prices are squeezing farmers, so they're not buying as much equipment. Also, dealers were already stocked up from previous years. On the other hand, their modular building business actually grew its revenue by 26%. They're seeing increased demand for research facilities, which is a very promising area. Looking ahead, Artsway knows it faces some challenges. The farming industry is always unpredictable depending on things like commodity prices, weather, and government programs. Interest rate fluctuations and decisions by their partners for original equipment manufacturing can also impact their business. This is on top of increasing cost for raw materials, especially steel. Artsway competes in two very different markets. The farm equipment industry is super competitive, with bigger players having more resources. Artsway tries to focus on smaller specific product areas where they can compete effectively. In modular buildings, competition comes from conventional construction companies. Artsway believes their strength lies in designing and building specialized modular structures faster than traditional builders. They get their raw materials from both domestic and foreign sources. They don't depend on just one supplier. For sales, they don't usually rely on just one or two customers, but this year they had two big customers accounting for a little over 15% of their sales. Backlog is a term you may hear used in these reports. It's basically how much work they have in the pipeline. In early February, their agricultural products backlog was down, but their modular buildings backlog was also down. They think their backlog will fluctuate. In agricultural products for 2024, the focus was on reducing costs and improving existing products. For modular buildings, they mostly worked on projects based on customers' needs. Artsway has some manufacturing rights and trademarks for their products. They license their loader-mounted spreader to another company who pays them royalties. As of the end of November, they had almost 70 people working on the agricultural side and just over 20 in modular buildings. Let's take a look at some of the key numbers directly from the financial statements. Overall, the company had a small loss of $94,000 from their regular businesses before counting the discontinued part, while in 2023, the income was $762,000. Once you include gains related to getting rid of the discontinued business, more on that later, their net income or total profit reached $307,000. The gross profit margin, the amount they make after subtracting the direct cost of making and selling their products as a percentage of sales, increased slightly from 28.3% to almost 30%. Basic earnings per share, which is a company's profit allocated to each outstanding share of common stock, reached 6 cents per share. Looking at the balance sheet, things like accounts, receivables, and payables, the stuff they are owed and owe has gone down a lot. They sold the real estate from their discontinued tools business, which is good. The tools business side is no more. They made a profit of about $400,000 from this discontinued operation due to the real estate sale, and in the prior year, the business unit had a $495,000 loss. Cash flow from operations, meaning the cash they generated from running their business, looks great at $2.6 million. Debt is a major thing to keep an eye on. They decreased their line of credit, paid off their roof term loan. It's a sign of them managing their debt in a positive way and continuing to strengthen their balance sheet. A critical audit matter related to how they value their inventories was highlighted by their auditors. This is especially important to note. Artsway needs to make complex judgments about how much their inventory is actually worth, considering how well the inventory is moving or if it will become obsolete. All this financial data and ratios are nice, but what do they mean for us looking at the company? Well, they are hoping commodity prices go back up. They seem to be managing debt well, and they should have no issues in the long term. This is, of course, all speculation based on their report. We'll see soon enough if their predictions hold up. Now, let's assess Artsway Manufacturing and how it looks as an investment. Direction assessment. The company seems to be at a turning point with one business segment strong and another weak. The focus on cost reduction combined with strong performance for modular buildings indicates they are trying to go in the right direction. But a key weakness is their dependency on the farming economy, which we know can have unpredictable cycles. Risks. There are real risks. The farming equipment sector is really sensitive to commodity prices and interest rates, and these economic factors can create a volatile demand. Also, you have to factor in the IRS's processing hold on potential tax refunds of over $1 million. That definitely introduces uncertainty. Stock price outlook. Estimating future value for Artsway is tricky because of its inconsistent performance and volatility, but we can make an educated guess. The valuation of Artsway as a company is at roughly $10 million, and we can estimate its future stock price per share to be between $2 and $2.50. Conclusion. So, what's our call? Overall, I am leaning towards a bullish position on this company with the expectation that it will continue growing into a profitable enterprise. The company can only go up in value from where it is at. Thanks for tuning in. Don't forget to subscribe, leave us a comment, and share this video so we can keep bringing you the best corporate analysis.